Hello, everyone. This is Andrew McNair from SWAN Capital with our January 2024 SWAN report. So, Happy New Year's. In this month's video, we will discuss some recent headlines that influence the financial markets. But I want to provide you some perspective with this video on what developments that you're seeing in the economy and the market may mean for you over the next few months ahead. Now, as always, please stay tuned at the end of this video for a required disclosure statement. Now, at SWAN Capital, our market outlook remains cautious because of world conflicts, higher consumer credit, coupled with higher interest rates. But let's keep things in perspective. The economy is still slowing, but holiday spending was decent. Unemployment is still relatively low, and interest rates aren't going up anytime soon. So everything is still in place for the Fed to cut rates in the summer. And as we can still try to manage this soft landing we've been hoping for the last year and a half, the forces that drove us upward in the final 2 months of 2023 are still in place. Now, sure, there will be jitters along the way, and the market wants 6 rate cuts instead of 3, so a very optimistic market at best. But we aren't talking about rate increases anymore, which is great to see that change in language with the Fed. Inflation remains higher than the Fed wants, but the risk of pushing the economy into a recession is a way far greater worry than being just 1 percentage point above their 2% inflation target. Now, we're also in an election year, and that needs to be factored in. The Fed is far more likely to be timid with any talk of hiking rates anytime soon. No incumbent running for re-election wants to face angry, unemployed workers at the polls. In fact, incumbents are far more likely to lean on the Fed, even though it's independent, to lower rates to improve the economy and ensure we don't slip into a deep recession, at least until after the election. We will see rate declines eventually, which the markets will like. Now, I would not hope for large rate decreases. That's just, in my opinion, not expected or smart. Don't let a slow month taint your view for the rest of the year. Jobs continue to hang in there. The ADP employment report surprised to the upside, showing we added 164,000 new private sector jobs in December. Incredible. This was higher than the consensus of 115,000 and significantly above November's growth of 101,000. Now, if we look at the BLS report, the Bureau of Labor Statistics, better known as the non-farm payrolls, it was anticipated to be lower than November's 199,000, with a consensus calling for about 158,000 jobs. In reality, the BLS number came in much higher than expected at 216,000 jobs. So there are plenty of jobs out there. Maybe not the ones that people want, but there are opportunities. Neither of these readings was so out of line that they would cause concern, either from the standpoint of the Fed having to resume raising rates to cool a hot jobs market, or that the economy was so bad that we should be alarmed about maybe a looming recession. So very healthy, positive numbers. Now, both reports showed that there wasn't a need for the Fed to act further and make a stronger case for lowering rates if the economy slows more and job gains remain muted. Now, in other news, because I think you're going to hear a lot about this, so I think it'd be important that I mention it, is the SEC approved the buying and selling of spot Bitcoin exchange-traded funds, ETFs, a decision that many hail as a game changer for Bitcoin investors. Now, while the ETFs are available to the mainstream investors now, they aren't for everyone. Spot Bitcoin ETFs are a riskier investment due to their higher volatility. There's also no guarantee that investors will be able to sell shares quickly or at their desired price. The SEC noted and made a specific point to make out that these exchange-traded products, ETPs, and quote, while we approve the listing and trading of certain spot Bitcoin ETP shares today, we did not approve or endorse Bitcoin outright. Investors should remain cautious about the myriad of risks associated with Bitcoin and products whose value is tied to crypto. So there you have it. The SEC is approving these ETFs, but they're saying we're not approving them as an investment that should be a part of your portfolio. And if you want to talk about how this affects your portfolio, what should be within your portfolio, that is a very important personal conversation that we should have one-on-one. Now, please remember that nothing we talk about here is a recommendation. If you'd like to talk about your personal financial situation, give us a call at 1-800-848-8768, and we'd be happy to talk to you. Thank you for watching this month's SWAN Report. We'll see you next month.